There's been a lot of discussion about what's going on with Hims and Hers. The stock has been absolutely all over the place the last few months. Shares will go up because GLP-1s were announced, then they fall when it's thought that maybe GLP-1s are going to be coming off the product list. But what's actually going on underneath with the company? I did a video last week and I can link to that in the show notes. But GLP-1s are not actually that big a deal for Hims and Hers based on the numbers that they've already reported through the second quarter of 2024. Management said on that conference call that GLP-1s at that point were about a $100 million run rate, meaning they were generating about $25 million per quarter. And the weight loss segment overall had just launched in Q4 of 2023. So this is not a business that has driven Hims and Hers growth in the past. Now looking forward, the loss of GLP-1s may potentially impact their growth in the future. But I think looking at any one product is missing the point with Hims and Hers. I think the strategy the company is building is to be a healthcare platform. This is a company that wants to go to consumers and say, hey, build a profile with us. Tell us what kind of things you need. And then we're going to sell you those products if we have them available. We can compound them. We can build them in the form factor you want. We're going to be a better healthcare partner with you than CVS or Walgreens. That's a pretty easy sell if you have dealt with those pharmacies before. So that's the platform that they're trying to build. And each time they add products, each time they buy a pharmacy so they can produce their own products, each time they bring a new generic to market, all of these things are steps in the right direction to build that platform. They basically want to abstract away the drugs they're selling at all and just sell you solutions. But I want to look at the numbers so that we have an idea of what this business looks like and what we should be watching with Hims and Hers, because I think that's really important as earnings season comes up and we're going to get distracted by all kinds of things. But where do we want to see progress from Hims and Hers? That's what I'm going to dig into today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's look at a couple of charts to start things off. Now, when I talk about building a platform, this is what I'm talking about. What you want to look at is the number of subscribers that Hims and Hers is working with on a monthly basis and the average order value. So these are numbers that they report every quarter. You can see that the number of subscribers since the end of 2021 has grown at a compound annual growth rate of 62.5%. The average order value is up 21.8%. That's what's going to drive revenue growth for Hims and Hers. Now, as I mentioned before, the weight loss segment didn't even exist at Hims and Hers until the end of 2023. So it's really only the last 2 quarters that were affected at all by weight loss products, including GLP-1s. GLP-1s were only included for a couple of weeks at the end of the second quarter. So when you look at that growth in the number of users and the amount of money that they're spending on the platform, the business's growth is not currently driven by all of the products that are getting attention in the market today. So that's noise. GLP-1s essentially are noise when you're looking back at Hims and Hers results. What does revenue and net income look like? Well, obviously they're growing really significantly based on the numbers that I talked about earlier. This is because of the increased number in subscribers. Compound annual growth rate over the past nearly 3 years, 73%, and the company is now net income positive. The question that Hims and Hers answered last quarter really for me was the company on a customer acquisition treadmill? They're doing a lot of advertising on places like social media to attract customers to the platform. The question is, are those customers churning out on a regular basis? And is that customer then just going to need to be reacquired by Hims and Hers? And I think the answer that we've seen in the financial statement so far is no. You are going to see the company be near break even, but if they're near break even, with this kind of growth rate, that's exactly what you want to see from a company that's building out a platform. Because if you're acquiring a customer that ends up being a customer with you for 5, 10, 15 years, that's ultimately a really long and valuable relationship. And that's the entire idea behind the business. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So I think right now, the first thing to look at as an investor is, are they building the platform that is ultimately going to be really valuable 5 to 10 years from now? I think the answer is yes. The evidence is pointing in that direction. And as long as the number of customers keeps growing, I'm not even worried about the spending per customer increasing. I just want the number of customers on the platform to keep growing because that will give the company incentive to add more and more products and ultimately increase sales and margins per customer. But what's the appropriate price to pay for Hims and Hers? And I want to go through some of these valuation numbers. First of all, here is a look at price to earnings and price to sales. Now, price to earnings is a little bit difficult to look at because the company's not making a very, very big profit right now. But price to sales, you can look at 3.7. That's about where the stock has traded historically if you go back to about 2022. So I think that's a pretty reasonable multiple to pay from a price to sales standpoint. But the other thing I want to show is the balance sheet. This is the cash on the balance sheet and the long-term debt. You can see that there is no long-term debt, but there's $227.3 million of cash on the balance sheet. So about 5% of the company's market cap is just cash on the balance sheet. That's a really strong position to be sitting in, especially when you're looking at some of the other competitors in the pharmacy space who have a lot of debt on their balance sheets, who have a ton of rent that they have to pay. This is the advantage of being a mainly digital company. You can adjust your cost structure to where there's profitable investments to be made. So I think when you take a long-term view of Hims and Hers and you don't look at the micro news of what's happening with GLP-1s, what specific drug is being approved or unapproved, what's on shortage, what's not, all of that stuff is noise. Think about what this business is going to look like 5, 10 years down the road. Is this going to be a better alternative to going to CVS or Walgreens to get some of your medications? Are we going to move to a world where more products are sold more competitively without insurance? I think that is going to be the case. Insurance adds a lot of friction into the system, doesn't necessarily lower costs, can still be incredibly expensive to buy drugs that you need depending on your insurance plan. So does this bring a better, more competitive platform to customers that can actually serve customers better? I think that's ultimately the vision. And that's what I want to see Hims and Hers built. That's where I think we're going to ultimately drive great long-term growth. And if you look at the actual impact of some of the products that are driving the stock price short-term, specifically GLP-1s, there's not actually that much impact on a trailing basis. So it'll be interesting to see what management says about this on the third quarter conference call. That'll be coming up in the next month or so. But I think what Hims and Hers is building continues to gain momentum. That's why I own shares. That's why I'm looking to add more on any sort of weakness, because any company that's growing in excess of 40% and you can get it for a under 4 price to sales multiple, that's a pretty good value, especially when margins are on the rise. So let me know what you think of Hims and Hers position today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.